Something is happening in quantum computing right now that most investors are completely missing. After decades of being a science experiment, a curiosity confined to research labs and academic papers, quantum computing is approaching a tipping point. And I am seeing signals from inside the technology industry that suggest we're closer to real commercial applications than almost anyone realizes. Today, I want to share with you the 3 quantum computing plays that I believe are worth serious attention right now. Let me take you back to 2006 because that year shaped everything I understand about how transformative technologies move from the lab to the real world. I was running NVIDIA, and we had been working on something called CUDA for several years. CUDA was our platform for using graphics processors for general-purpose computing, not just rendering images but solving complex mathematical problems. At the time, almost nobody cared. The scientific computing community was deeply skeptical. They had their CPU-based systems. They had their established workflows. They didn't see why they needed graphics cards to do serious computation. I remember giving presentations at academic conferences where professors literally walked out of the room. They thought we were wasting their time with a gimmick. But I could see something they couldn't. I could see that parallel processing, the ability to do thousands of calculations simultaneously rather than one at a time, would eventually transform computing. The problems that mattered most, simulating physical systems, training machine learning models, processing massive data sets, these problems were inherently parallel, and our GPUs were inherently parallel processors. The technology and the applications were destined to converge. It took years. We invested hundreds of millions of dollars in CUDA before it generated meaningful revenue. We supported researchers who couldn't afford our hardware. We built software libraries and tools that nobody asked for. We kept believing when the market kept doubting. Then deep learning happened. Researchers discovered that GPUs could train neural networks orders of magnitude faster than CPUs. Suddenly, everything we had built for a decade became incredibly valuable. NVIDIA went from a gaming company to the most important infrastructure provider for artificial intelligence. Our market value increased by over $1 trillion. The lesson I learned from that experience is that transformative technologies follow a predictable pattern. First, there is a long period where the technology works but isn't practical. During this period, most people dismiss it. The skeptics seem reasonable, the believers seem crazy. Then there is a tipping point where the technology suddenly becomes practical and everything changes almost overnight. The skeptics are proven wrong, the believers are vindicated, and the companies that invested during the unpractical phase capture enormous value. I've seen this pattern with GPUs, I've seen it with the internet, I've seen it with mobile computing, I've seen it with cloud computing. And now I am seeing it with artificial intelligence each time. There is a long buildup that most people ignore, followed by a rapid transformation that catches most people off guard. I tell you this story because I see the same pattern emerging in quantum computing right now. Quantum computers are where GPUs were in 2006. The technology works in principle. The applications are theoretically compelling, but the practical implementations are limited, the costs are astronomical, and most investors have either written it off as science fiction or are waiting for some clear signal that the technology is ready. That signal is coming sooner than people think. And the companies that are positioning themselves now, that are building the infrastructure and the applications and the expertise, those are the companies that will capture enormous value when quantum computing reaches its tipping point. Now, let me explain what quantum computing actually is, because I find that most investors have only a vague understanding. They know it is supposed to be faster than regular computers. They've heard about qubits and superposition, but they don't really grasp what makes quantum computing different or why it matters. Classical computers, the ones you use every day, process information using bits. Each bit is either a 0 or a 1, nothing in between. All computation, no matter how complex, ultimately reduces to manipulating these zeros and ones. This approach has worked remarkably well for decades. We've made bits smaller and smaller, packed more and more of them onto chips, and achieved extraordinary increases in computing power. But there are problems that classical computers simply cannot solve, no matter how many bits you throw at them. The issue is combinatorial explosion. Some problems have so many possible solutions that checking them all would take longer than the age of the universe, even with the fastest supercomputers ever built. Drug discovery is a perfect example. A pharmaceutical company wants to find a molecule that binds to a specific protein in a specific way. The number of possible molecules is astronomically large. Testing them all in a lab would take centuries. Simulating them all on a classical computer would take even longer. So drug companies use shortcuts and heuristics that find decent solutions, but miss potentially better ones. Quantum computers approach these problems differently. Instead of bits that are either 0 or 1, quantum computers use qubits that can be both 0 and 1 simultaneously through a property called superposition. When you have multiple qubits in superposition, they can represent all possible combinations of zeros and ones at the same time. A quantum computer with just 300 qubits can theoretically represent more states than there are atoms in the observable universe. This allows quantum computers to explore vast solution spaces in parallel, finding optimal solutions to problems that would be impossible for classical computers. Not faster by a factor of 2 or 10 or 1,000. Faster by factors that don't even have names. Exponentially faster in ways that change what is computationally possible. Let me give you some concrete examples of problems that quantum computers could solve. In finance, optimizing a portfolio of thousands of assets involves exploring a solution space that grows exponentially with the number of assets. Classical computers use approximations that find good solutions but not optimal ones. A quantum computer could potentially find the truly optimal allocation, generating better returns for the same risk. In logistics, routing a fleet of delivery trucks involves similar combinatorial complexity. Companies like FedEx and UPS spend billions trying to optimize their routes, and even small improvements save enormous money. A quantum computer could potentially find routes that are genuinely optimal rather than approximately optimal, saving billions of dollars across the industry. In cryptography, quantum computers threaten the security systems that protect everything from your bank account to national defense. The encryption algorithms we rely on today are secure because classical computers can't factor large numbers quickly. Quantum computers can factor large numbers exponentially faster, breaking these encryption schemes. This is both a threat and an opportunity, threatening existing systems while creating demand for new quantum-resistant cryptography. In machine learning, quantum algorithms could potentially train certain types of models exponentially faster than classical algorithms. As AI becomes more important to the economy, any speed-up in training becomes enormously valuable. A quantum advantage in machine learning could be worth trillions of dollars. The catch, and there is always a catch with emerging technologies, is that quantum computers are incredibly difficult to build and operate. Qubits are fragile. They lose their quantum properties through a process called decoherence when they interact with their environment. Most quantum computers today need to be cooled to temperatures colder than outer space. They can only run calculations for tiny fractions of a second before errors accumulate. But here is what is changing. The technology is improving rapidly. Every year, quantum computers get more qubits, lower error rates, and longer coherence times. We're approaching what researchers call quantum advantage, the point where quantum computers can solve certain problems faster than any classical computer. Some researchers believe we've already achieved quantum advantage for narrow, specialized tasks. Over the next 5 to 10 years, I expect quantum computers to become practically useful for specific high-value applications: drug discovery, material science, financial optimization, cryptography, logistics, machine learning. These are areas where quantum computing could provide enormous value even with the limitations of near-term quantum hardware. Now, let me share the 3 quantum computing plays that I believe are worth watching closely. These aren't necessarily recommendations to buy today. The timing and valuations matter. But these are companies that I believe are positioned to benefit if quantum computing develops as I expect. The first quantum computing play worth watching is IBM. Now I know IBM might seem like a strange choice. IBM is an old technology company that has struggled to grow for decades. Their stock has been dead money for years. Why would IBM be a quantum computing leader? The answer is that IBM has been investing seriously in quantum computing longer than almost anyone else. They started their quantum program in the 1990s, decades before most companies took the technology seriously. They've built an enormous research operation with some of the best quantum scientists in the world. And they've made their quantum computers available through the cloud, allowing thousands of developers and researchers to experiment with real quantum hardware. IBM's quantum roadmap is the most detailed and aggressive in the industry. They've laid out specific milestones for the next decade, including plans for quantum computers with over 100,000 qubits by the early 2030s. They've consistently hit their roadmap targets, building credibility that their future projections are realistic. What I find particularly impressive about IBM's approach is their focus on error correction. The fundamental challenge in quantum computing isn't building more qubits. It is building qubits that work reliably enough to perform useful calculations. IBM is attacking this problem systematically, developing hardware and software techniques to reduce errors and eventually achieve fault-tolerant quantum computing. IBM is also building the software ecosystem around quantum computing. Their Qiskit platform is the most widely used quantum software development kit. Thousands of developers have learned to program quantum computers using Qiskit. When quantum computers become practically useful, these developers will build applications using tools they already know. This ecosystem creates a moat that will be difficult for competitors to cross. The business model is also evolving in interesting ways. IBM offers quantum computing as a cloud service, charging customers to access their quantum hardware remotely. Major corporations are paying significant fees to explore quantum applications for their businesses. This revenue is still small relative to IBM's overall business, but it is growing rapidly and demonstrates real commercial interest in the technology. The risk with IBM is that they're a conglomerate with many struggling businesses alongside their quantum efforts. The stock might not move much, even if quantum computing succeeds, because the gains could be offset by weakness elsewhere. But for investors who believe in quantum computing, IBM offers exposure to one of the most serious and well-funded quantum programs in the world at a valuation that doesn't assume quantum success. I want to share something specific about IBM's quantum strategy that I find compelling. They've published detailed technical roadmaps with specific qubit counts and error rates for each year. In 2021, they released a 127 qubit processor. In 2022, they released a 433 qubit processor. In 2023, they released a 1,000 qubit processor. They've hit every milestone they promised. This track record matters because it builds credibility. When IBM says they'll have a 100,000 qubit system by 2033, I believe them because they've delivered on every previous promise. This predictability is rare in quantum computing, where most companies make vague claims about future capabilities without specific commitments. IBM is also thinking carefully about the path to commercial value. They're working with major enterprises to identify specific applications where quantum computing could provide advantages in the near term. They're building industry-specific software that translates business problems into quantum algorithms. They're creating a pathway from research experiment to commercial deployment that other quantum companies lack. The second quantum computing play worth watching is Alphabet, the parent company of Google. Google has been a major force in quantum computing research for over a decade, and they made global headlines in 2019 when they claimed to achieve quantum supremacy, the point where a quantum computer solves a problem faster than any classical computer could. That claim was controversial. IBM disputed it. arguing that their classical supercomputers could solve the same problem faster than Google claimed. The technical details are complex, and the debate continues. But what is not disputed is that Google has built some of the most advanced quantum hardware in the world and is pushing the boundaries of what is possible. Google's approach to quantum computing is different from IBM's in important ways. While IBM is focused on building larger systems with more qubits, Google has emphasized improving qubit quality and reducing errors. They've developed a quantum processor called Sycamore that demonstrates remarkable coherence times and gate fidelities. Their research team is world-class, including some of the most cited quantum computing scientists alive. Google has also been explicit about their long-term vision for quantum computing. They believe quantum computers will eventually be essential for training advanced artificial intelligence systems. As AI models become larger and more complex, the computational requirements grow exponentially. Classical computers will eventually hit limits that quantum computers can transcend. If you believe in the long-term future of AI, and I certainly do, then Google's quantum AI research becomes strategically important. The advantage of investing in Alphabet for quantum computing exposure is diversification. Quantum computing is one of many growth initiatives at Alphabet, alongside their dominant search and advertising business, their cloud computing platform, their autonomous vehicle subsidiary Waymo, and numerous other projects. If quantum computing develops slowly or faces setbacks, Alphabet's core business provides downside protection. If quantum computing takes off, Alphabet is positioned to be a leader. The disadvantage is that quantum computing is a small part of Alphabet's overall value. Even a major breakthrough in quantum computing might not move the stock significantly because the impact would be diluted by everything else Alphabet does. For investors who want concentrated quantum computing exposure, pure play companies might be more attractive. The third quantum computing play worth watching is a basket of pure play quantum computing companies. These are companies focused exclusively or primarily on quantum computing without the diversification of IBM or Alphabet. The companies in this basket include IonQ, Rigetti Computing, D-Wave Quantum, and Quantum Computing Incorporated, among others. These pure play companies are highly speculative. Most are losing money. Some may not survive long enough to see quantum computing reach commercial viability. The stocks are volatile, often moving 20 or 30% in a day, based on news about technology milestones or contract announcements. This is not an investment for the faint of heart, but for investors willing to accept high risk for potentially high reward. The pure play quantum companies offer something that IBM and Alphabet cannot leverage. If quantum computing succeeds, these companies could increase in value by 10 or 20 or 50 times. The entire company's value depends on quantum computing, so there is no dilution from other businesses. IonQ is particularly interesting because of their technological approach. Most quantum computers use superconducting qubits, which require extreme cooling and have limited coherence times. IonQ uses trapped ion qubits, which are individual atoms suspended in electromagnetic fields. Trapped ion qubits have much longer coherence times than superconducting qubits, which could be a significant advantage as quantum computers scale up. IonQ has also been aggressive about commercialization. They offer their quantum computers through all three major cloud platforms: Amazon Web Services, Microsoft Azure, and Google Cloud. This gives them broad distribution and allows them to reach customers who might not otherwise have access to quantum hardware. Their revenue is growing rapidly, though still from a small base. Rigetti Computing is taking a different approach, focusing on building quantum computers that integrate tightly with classical computing systems. Their hybrid classical quantum approach might be more practical for near-term applications, where quantum computers can accelerate specific parts of a calculation while classical computers handle the rest. Wave Quantum has the longest history in the industry, having shipped commercial quantum computers since 2011. However, their technology is fundamentally different from other quantum computers. D-Wave builds quantum annealers, which are specialized for optimization problems, but cannot run the general quantum algorithms that other companies focus on. This specialization could be an advantage or a limitation depending on how the market develops. I want to make an important point about the pure-play quantum companies. Most of them went public through SPAC mergers in 2021 and 2022. During the speculative frenzy that followed the pandemic, their stock prices have fallen dramatically from their peaks, in some cases by 80 or 90%. This might seem discouraging, but I view it as potentially advantageous for new investors. The technology hasn't gotten worse since 2021. If anything, it has gotten better. The companies have continued making progress on qubit counts, error rates, and coherence times. What has changed is the valuation. You can now buy the same companies at a fraction of the price, getting more technology per dollar invested. Of course, lower prices don't automatically make something a good investment. These companies are still speculative, they're still losing money. Some will fail. But for investors who are interested in quantum computing at 2021 valuations, today's valuations might be more attractive. The key to investing in pure-play quantum companies is position sizing. These are speculative investments that could go to zero. You should only invest money you can afford to lose entirely. But if you allocate a small percentage of your portfolio to a diversified basket of pure-play quantum companies, you can participate in the potential upside while limiting your downside to a defined amount. Now, let me explain how I think about the timing of quantum computing investments, because timing matters enormously in emerging technology sectors. We're currently in what I would call the infrastructure phase of quantum computing. The technology is real, but limited commercial applications exist but are narrow. The companies building quantum hardware and software are investing heavily without commensurate revenue. This is analogous to where the internet was in the early 1990s, or where AI was in the early 2010s. During the infrastructure phase, the right investments are in the companies building the foundation, the hardware makers, the software platforms, the cloud providers offering quantum access. These companies may struggle financially in the near term, but they're accumulating technical capabilities and market position that will be valuable when the technology matures. The next phase will be the application phase, when quantum computers become useful for specific commercial problems. I expect this phase to begin within the next 5 years for early applications like chemical simulation, optimization, and machine learning. During the application phase, the investment opportunity shifts toward companies using quantum computing rather than just building it, pharmaceutical companies that can discover drugs faster, financial firms that can optimize portfolios better, logistics companies that can route deliveries more efficiently. The final phase will be the ubiquity phase, when quantum computing becomes a standard part of computing infrastructure like GPUs or cloud services are today. This phase is likely at least a decade away, possibly longer. During the ubiquity phase, quantum computing becomes a commodity, and the investment opportunity shifts toward companies that can use quantum computing most creatively rather than those that provide it understanding. Which phase we're in helps you identify the right investments. Today, in the infrastructure phase, the best quantum investments are in companies building quantum hardware and software. Tomorrow, in the application phase, the best investments might be in companies applying quantum computing to valuable problems. The companies that win in each phase may be different. Let me give you a historical analogy that I find helpful. In the early days of the internet, the best investments were in infrastructure companies. Cisco built the routers that connected networks. Sunday Microsystems built the servers that hosted websites. These companies captured enormous value during the infrastructure phase, but during the application phase, the best investments shifted. Google captured search. Amazon captured e-commerce. Facebook captured social networking. The infrastructure companies that dominated the early internet weren't the ones that dominated the application phase. I expect a similar evolution in quantum computing. Today's hardware leaders might not be tomorrow's application winners, or they might be. It is impossible to know in advance, but understanding the phase we're in helps you think about what kinds of companies to focus on. One more point about timing. The financial markets have a terrible track record of predicting when transformative technologies will become commercially significant. The internet was dismissed as a fad in the mid-1990s, then became a mania in the late 90s, then crashed, then proved to be more important than even the optimists predicted. Artificial intelligence followed a similar pattern, with multiple AI winters followed by breakthroughs that exceeded expectations. Quantum computing will probably follow the same pattern. There will be periods of excessive optimism where valuations get ahead of reality. There will be periods of excessive pessimism where valuable companies trade at bargain prices. The key is to maintain a long-term perspective, adding to positions during periods of pessimism and avoiding the temptation to chase during periods of optimism. I also want to address the risks that could derail quantum computing entirely, because no emerging technology is guaranteed to succeed. The first risk is technical. Quantum computers might hit fundamental limits that prevent them from scaling to commercially useful sizes. Error rates might prove impossible to reduce sufficiently. Coherence times might plateau. The optimistic projections about future quantum capabilities might prove wrong. This technical risk is real but diminishing. Every year, quantum computers improve along multiple dimensions. The trajectory is clearly positive, even if the exact timeline is uncertain. I've been in the technology industry long enough to know that when smart people are making consistent progress on a hard problem, they usually solve it eventually. The second risk is commercial. Even if quantum computers work as advertised, the applications might be narrower than expected. Classical computers are incredibly powerful and getting better every year. Problems that seem quantum suitable today might be solved by classical approaches before quantum computers are ready. The addressable market might be smaller than quantum optimists believe. This commercial risk is harder to assess because it depends on factors we can't predict. But I am optimistic for a few reasons. First, the problems quantum computers can solve are genuinely important. Drug discovery, materials science, and optimization have enormous economic value. Second, quantum computing enables new approaches that are impossible classically, not just faster versions of existing approaches. Third, the companies investing in quantum computing are sophisticated and have their own assessments of commercial potential. If the market were obviously limited, they wouldn't be investing billions of dollars. The third risk is competitive. Quantum computing might succeed, but your specific investments might fail. The company you own might lose the technology race. The approach they're pursuing might prove inferior. They might run out of money before quantum computing becomes commercial. Individual company risk is high, even if the overall sector succeeds. Diversification is the antidote to competitive risk. Rather than betting on a single quantum company, spread your investment across multiple approaches and multiple companies. Own IBM and Alphabet for large cap exposure. Own a basket of pure play companies for speculative upside. Accept that some investments will fail while hoping that others succeed spectacularly. Let me share how I think quantum computing intersects with artificial intelligence, because this intersection is where I see the most transformative potential. Training large AI models requires enormous computational resources. The biggest models today use thousands of GPUs running for months, consuming megawatts of power and costing hundreds of millions of dollars. As models get larger, these requirements grow exponentially. There are legitimate questions about whether classical computing can scale indefinitely to train the AI systems of the future. Quantum computing could break through this scaling barrier. Quantum machine learning algorithms can potentially train certain types of models exponentially faster than classical algorithms. Quantum computers can simulate quantum systems that classical computers cannot enabling AI applications in chemistry and materials science that are currently impossible. At NVIDIA, we're taking quantum computing seriously as a complement to our GPU business, not a replacement. We've developed tools for simulating quantum computers on GPUs, allowing researchers to develop quantum algorithms before quantum hardware is ready. We're exploring hybrid classical quantum approaches where GPUs and quantum processors work together. We believe the future of computing is heterogeneous, with different types of processors handling different types of problems. I want to explain why NVIDIA is investing in quantum simulations specifically. Today's quantum computers are limited in size and capability. Researchers want to develop algorithms for quantum computers that don't exist yet. Machines with thousands or millions of qubits and very low error rates. The only way to test these algorithms is to simulate them on classical computers. GPUs are extraordinarily good at this simulation. A single modern GPU can simulate a quantum computer with dozens of qubits, allowing researchers to develop and test algorithms that will run on real quantum hardware in the future. We've created an entire platform called cuQuantum that optimizes quantum simulation on GPUs. This investment in quantum simulation serves multiple purposes for NVIDIA. It helps the quantum computing ecosystem develop, which is good for technology broadly. It creates demand for our GPUs from quantum researchers, and it positions us to understand how classical and quantum computing will work together in the future, informing our own product development. I should also mention that we're watching quantum computing's potential impact on cryptography very carefully. Much of the security infrastructure of the Internet relies on encryption that quantum computers could break. This creates both risk and opportunity. The risk is that quantum computers could undermine existing security systems. The opportunity is that quantum-resistant cryptography will need to be deployed across billions of devices and systems, creating enormous demand for new hardware and software. This is why I am particularly interested in quantum computing companies that embrace hybrid approaches rather than viewing quantum as a replacement for classical computing. The near-term opportunity is in combining classical and quantum systems, using each for what it does best. Companies that understand this hybrid future are better positioned than companies that view quantum as an all-or-nothing proposition. The companies I've highlighted today all have hybrid strategies to varying degrees. IBM's Qiskit platform supports hybrid classical quantum workflows. Alphabet's quantum AI research explicitly targets hybrid approaches. The pure-play companies are building quantum systems that integrate with classical cloud infrastructure. This hybrid orientation is essential for commercial success in the near term. Let me close with some thoughts on how to actually invest in quantum computing, given everything I've discussed. First, size your position appropriately. Quantum computing is speculative. The timeline is uncertain. The technical and commercial risks are real. Don't bet your retirement on quantum computing stocks. Allocate a percentage of your portfolio that you can afford to lose entirely while still participating in the potential upside. For most investors, something like 2 to 5% of a portfolio is appropriate for highly speculative technology investments. Second, diversify across approaches. No one knows which quantum technology will win. Superconducting qubits, trapped ions, photonic approaches, topological approaches. Each has advantages and disadvantages. Spread your investment across multiple approaches rather than concentrating on a single bet. The same principle applies to company size. Own some large cap exposure through IBM and Alphabet for stability. Own some pure play exposure for upside potential. Third, take a long-term view. Quantum computing won't transform the economy next year or probably in the next 5 years. This is a decade-long investment thesis. You need patience to hold through the inevitable setbacks and hype cycles. If you are looking for quick returns, quantum computing is the wrong place. But if you can hold for 10 years or more, the potential rewards could be substantial. Fourth, stay informed. Quantum computing is evolving rapidly. New breakthroughs happen regularly. Companies rise and fall. The landscape in 5 years will look different from today. Invest time in understanding the technology and following developments. This knowledge will help you make better decisions as the situation evolves. Follow the research publications, the company announcements, the analyst reports. Understanding what is happening will give you conviction to hold through volatility. Fifth, be prepared for volatility. Quantum computing stocks will not move in a straight line. There will be periods of euphoria where valuations seem absurd. There will be periods of despair where everyone writes off the technology. The investors who succeed will be the ones who maintain discipline through both extremes, adding to positions when pessimism is high and resisting the urge to chase when optimism is excessive. The quantum computing revolution is coming. I've seen enough transformative technologies in my career to recognize the pattern. The research is real. The progress is consistent, the applications are valuable. The only questions are timing and which companies will capture the value. The 3 plays I've shared today, IBM for enterprise quantum leadership, Alphabet for AI, quantum integration, and a basket of pure plays for speculative upside, represent different ways to participate in this opportunity. Each has different risk-reward characteristics. Each is appropriate for different investors. What is not appropriate is ignoring quantum computing entirely. Technology is too important. The potential is too large. The infrastructure phase is the best time to invest before everyone recognizes what is happening, before valuations reflect the eventual opportunity. By the time quantum computing is obviously successful, the best investment opportunities will have passed. I've built my career on seeing transformative technologies before others and positioning for their success. GPUs for gaming, GPUs for scientific computing, GPUs for artificial intelligence. Each time, the market doubted until suddenly it didn't. Quantum computing follows the same pattern. The doubt is high today. The opportunity is now.